Hey traders, wild day on Wall Street. The S&P 500 snapped its winning streak, tech stocks took a hit, and we got some surprise moves off the Fed wires. I've got the full breakdown of what just happened, and what it could mean for tomorrow. Let's get into it. Alright, so here's how things wrapped up on this tax day, Tuesday, April 15, 2025. S&P 500 dropped 0.9%, closing at 5,060, ending a 3-day win streak. Nasdaq took the brunt, falling 1.4%, finishing just under 15,800. Big names like Nvidia and AMD got hammered. Dow Jones held up better, down just 0.3%, closing around 38,280. Defensive plays kept it afloat. Today wasn't just about price action, it was about rotation. We saw some major shifts between growth and value, and a lot of that came down to two key things: a hotter-than-expected economic print and some eyebrow-raising Fed speak. So first up, retail sales for March came in hot, up 0.7% month-over-month, versus expectations of 0.3%. That immediately reignited the inflation conversation. We also got the Empire State Manufacturing Index, which surprised to the upside, came in at plus 9.3, the highest in over a year. Now here's the kicker: Fed Governor Lisa Cook spoke midday and didn't mince words. She said the Fed has the tools and the patience to hold rates steady longer if inflation doesn't show consistent cooling. Markets did not like that. That combo of strong economic data and hawkish Fed talk sent yields spiking, 10-year Treasury up to 4.44%, and growth stocks felt it hard. From a technical perspective, we had some key levels tested today. The S&P 500 broke below 5,100, which had been a support zone since early April. Next support looks like 5,030, and if that gives out, 4,980 is the line in the sand. Nasdaq 100 lost the 16,000 level, which was a major psychological line. The 50-day moving average around 15,730 is now in focus. Dow held above 38,000, which is a solid floor for now. One bright spot: small caps. The Russell 2000 only fell 0.2%, which shows money isn't leaving the market, it's rotating. Let's talk sectors. Tech XLK was the big loser today, down 1.7%. Semiconductor names like Nvidia, minus 3.2%, AMD, minus 4.1%, and ASML, minus 2.8%, dragged. Financials, XLF, held up decently. JP Morgan gained another 0.6% post-earnings. Energy, XLE, actually finished green thanks to a pop in oil, WTI crude back above $85. Utilities, XLU, also saw unusual volume, defensive money flow showing up. And get this, Tesla traded over 200 million shares today, way above average. Why? Word's getting out about potential delivery shortfalls in China, but the company hasn't confirmed anything yet. So what's my read heading into Wednesday? First, we've got Fed Beige Book dropping at 2 p.m. Eastern Time tomorrow. That's going to give us a window into regional economic activity, and markets will be listening for any signs of softening that could ease rate pressure. Second, earnings season is heating up. Tomorrow we get reports from United Airlines, Morgan Stanley, and Netflix after the bell. Netflix in particular could swing sentiment big time, especially for tech. My eyes are also on whether the S&P 500 can reclaim 5,100. If not, I think we could see some profit-taking accelerate, especially if yields keep climbing. For traders, watch bond yields like a hawk, stay nimble with tech exposure, and don't ignore those boring sectors. Utilities and healthcare have been getting quiet inflows. If you found this breakdown helpful, do me a favor, drop a like, hit that subscribe, and let me know in the comments, what's your outlook for the S&P the rest of this week? Are we heading for 5,200 again or breaking below 5K? I'll be back tomorrow after the close with another full recap. Until then, trade smart, protect the capital, and I'll catch you in the next one.